Chuka, thank you so much for joining us. Now, we're going to focus
me.
on the solutions, we're going to focus on the positives, but actually, what do you tell someone who's a bit depressed, who's been working on sustainability and ESG for a long time, and this year it just feels a bit blah?
Well, look, the transition will ebb and flow. It will never be linear. It will go up and down. But actually, I mean, we'll go into it. I think the debate is moved on a bit relative to this. Are you for or against investment in the transition? Do you believe this is a hoax or not? All of that. I think the debate.
It's happening. It's happening, and people are still investing, just maybe more quietly.
Well, look at the figures. If you read some of the headlines, not of course the more accurate headlines in Bloomberg, you'd think that everybody is pulling back from this thematic. But public sustainable AUM is at about $3.2 trillion at the moment. The US was not necessarily historically the big driver of that. Around 85% of the AUM in terms of where the funds are domiciled is European. And then if you look more specifically at investment in the energy transition, and the figures are courtesy of BNEF, of course, but you had 2.1 trillion invested in the energy transition in 2024. 39% of that was mainland China. If you look at Europe, I consider the UK to be part of Europe. It was about 21.2%, and then the US was, 16.2%. So the US was never like the massive driver of this. And actually what the previous administration in the US was trying to do was obviously to pull the US up the rankings through the Inflation Reduction Act. But how I think the debate's moved on is I don't think it is any longer just about what you think about sustainability. It's about how you can achieve greater energy dominance and energy abundance. And that is something that the US administration is absolutely committed to. And I think the second thing for me is that the interplay between geopolitics and these energy supply issues has never been more pronounced. And we've seen that play out through the tariff tensions and the trade war since the beginning of the year. So I think the fulcrum around which the debate is moving is away from for or against sustainability towards how am I get my energy and how does this shore up my position on the geopolitical playing field?
But Chuka, I mean, going back to the US just one second, it's clear that the president said he's no fan of the green transition. So if you look at the, as you laid it out, US, Europe, and China, is the US going to fall further behind in the green transition?
If you don't see levels of investment continuing to go up and everywhere else is ploughing money in, then the US's relative position may fall behind. But I don't think it is a given that one administration necessarily dictates the course for the whole of the US going forward. So I think you'd be a brave person to make a call on that right now. And of course, as I said, the administration wants energy abundance, and to achieve that, you need a kind of all of the above approach. And so they're incredibly interested in nuclear, very interested in geothermal. If you look at the US Congress, there's a degree of bipartisan support for some of the different types of hydrogen. And that's because we're all having to deal with the increasing energy demand from AI, electrification, rising temperatures, which of course mean that we use more energy. And then you've of course got the energy demand coming from the emerging world. And as their GDP per capita increases, so does the energy demand. And actually, if you look at the increase in the energy demand last year, 80% of that was coming from the emerging world. And actually, just take India alone, it accounted for more of that energy growth than a whole load of developed countries combined. So you take those set of factors, we need more energy. Where are we going to get it? And it's kind of, frankly, an all of the above approach to achieve energy dominance.
On the big, beautiful bill from the US, where does it leave some of the green energy and green transition? Could it be called, as you suggest, other things, but still go in that direction?
Who knows what parts of that survive? I think you also have to understand the motivation. The motivation there is how to pay for the renewal of the 2017 tax cuts. That is the ultimate goal. It is not necessarily how do we go hacking away different support for the green economy. That is like a secondary consideration. I think in Congress, it's more how can we find the money to pay for the renewal of the tax cuts, which I think over a 10-year period, you're going to have to find at least $5 trillion to pay for that, and the revenue that that I think is forecast to come in from tariffs. I mean, who knows where they will land when the end of the pause comes up on the 9th of July. I think the consensus view is the revenue from the tariffs isn't going to be enough to pay for the $5 trillion cost of renewing the tax cuts for another 10 years. So where are you going to get the money? And I think it's more kind of a deficit and funding issue than it is a sustainability issue.
So where's the money when you look at some of the emerging markets that you mentioned? Where's the smart money being deployed right now on sustainability?
Well, generally speaking, about a third of energy transition investment is going into electrified transport. About a third is going into low carbon energy and renewables. We're seeing a bit more of a diversification of where the funding is going from, but those two in particular, and also investment in power grids, is dominating. I think in the short term that is likely to continue, but the diversification in the medium term should tick up. And one thing that we are beginning to see, I mean, obviously, certainly if you look in the public markets and green economy stocks, it's been a very tough ride since the end of 2022. But it does look like there are some, at least short-term signals indicating perhaps we're now at an inflection point. And if you look, say, for example, at the performance of the eco index over the last month, it's actually outperformed the S&P 500 and the NASDAQ, which it has certainly not been doing over the last 2 to 3 years. And some of the things that have been an impediment for the onward march of green economy stocks, like the higher rates environment, supply chain issues, permitting and planning reforms, there are quite positive signs that some of that will be resolved. So although our strategists in JP Morgan Markets are forecasting there will be a degree of inflationary impact from the tariffs, we still see nevertheless some monetary easing. We're calling a couple more cuts from the Bank of England this year, at least another one from the ECB and the Fed. And so that should hopefully help green economy stocks. And of course, on both sides of the Atlantic, there's this huge focus on planning and permitting reform, which will also help many of these companies.
What accelerate in terms of what just getting it to market?
Yeah, removing the red tape and the impediments to never mind being able to get the finance, but actually being able to build the projects. In the private capital space, again, good signs, positive signals. There were $32 billion worth of funds raised in the private capital space. EQT had a very big one, as did Blackstone. But I think the key things there for companies raising money in that space, and look, the problem here is not a lack of capital, it is a lack of investable, bankable projects as ever. And if you've got a good management team, you've got solid offtake and contracted agreements, you've got a decent cap stack with credible investors and proven technology, people don't want to fund a science project, you can raise money. And so in the private capital space, there is a decent level of activity. The drop that we saw between 23 and 24, we haven't seen a drop. We're kind of so far at the beginning of 2025 on a level with where we were at the end of 24. So I think actually there's quite positive signals, but it's not like companies investing in this space have been immune from the impact of what all companies are seeing, and
And that's trade and that's tariffs.
Yeah, well, I mean,
that's CapEx in general, right?
Yeah, I mean, you look at the investment banking industry. If I just move away from strictly the green part, yeah, I mean, companies have been having to deal with the geopolitical uncertainty, the Middle East conflict, the tariffs, and so forth. But they're not panicking. They have come into this period of uncertainty with strong balance sheets, a strong liquidity position. They've traded reasonably prosperously over the last few years. So this is very different, if you like, from say 5 years ago when people were going into COVID and there were massive worries around liquidity. People's balance sheets weren't as healthy. They hadn't been trading so strongly. So generally speaking, what we see, across our investment banking business is no panic. We have had a lot of our deals paused, but people are not pulling them. Okay. They are waiting to see things settle down. But we've got a very, very strong pipeline on the M&A side.
On green deals or deals in general?
Deals in general. And then, if you look at the equity markets, now we're obviously at the same level or above if you look at the different equity indices as we were Liberation Day. So the kind of sense of hope and optimism is there, but nobody has the confidence with conviction to call the outlook at the moment, just given the uncertainty. But if the uncertainty recedes, then I think you're going to see a lot of deal activity. You'll see more companies coming to market.
I mean, financial institutions actually, a lot of them quit, including your bank, from the Net Zero Banking Alliance after Trump was elected president. Does it make a difference on running day-to-day, on capital available? Does it make a difference at JP Morgan, or do you stick to net zero targets?
We decide what we're going to do irrespective of any of these broad coalitions, not to do any of them down. They will have their role to play, but technical membership of an organization doesn't dictate what JP Morgan does. We're a bank that handles $10 trillion a day. But for us, this is an essential part of our business. Jamie Dimon, our CEO, has been very clear publicly that we want to be the bank of choice for companies wanting and needing advisory to go on the path of transition or to raise finance. We have one of the biggest green investment banking businesses in the world. We made nearly $1 billion in revenue from green transactions or green companies last year. So as for our clients, as for us, this is a really big commercial opportunity, and you leave the field, you'll miss out on the opportunity.
I mean, there's also this fair access to finance, bill that's under consideration in Congress. Again, what does that mean for banks' ability to handle fossil fuel clients? And does that change? Does that delay anything, or is it just an added layer of complexity? But we'll get to where we need to be in good time.
If you're of our size and you operate all over the world, inevitably you get stakeholders on both sides of the argument. I think what I'd say is that I think we've been very consistent in our approach to this topic as a corporate. We never subscribed to the kind of finance-centric view of the transition, which saw banks sitting as policemen telling our clients what they can and they can't do, dictating where you deploy and allocate capital. That is not our role. We don't have like a democratic mandate to do that. Our role is to enable the transition by providing access to advisory and finance for companies that need to go on that journey. Now, there were others who made that argument, I think particularly in the lead-in to COP26. I think there was some hubris around that at the time, but now realism and pragmatism reigns. And that's quite right, because the transition is not going to happen in isolation to societal change. And we have this trilemma as a society that we're trying to meet, which is how do you deliver energy security, affordability, and sustainability all at the same time? And the idea that banking institutions are the ones who are going to solve that problem is frankly absurd. And there were some who were suggesting that some years ago and have been proved wrong. That's always been our position, and we've always said, judge us, by what we do and what we finance. And we set ourselves a goal that we wanted to achieve of financing and facilitating $1 trillion to help deliver against the transition, and that ran from 2021 and 2021, and goes to 2030. We've done. And this is until the end of 23, and since then we've done more, but up until that point we'd done more than $242 billion worth of financing against that goal. And that's what matters for me, not all the noise and the kind of loud voices on the extreme ends of the debate, but actually what are you doing to make a difference? And look, let's just be completely frank about this. In the short term, we do not have low carbon alternatives and renewables at scale, given the energy demand challenges I mentioned earlier, to do away with fossil fuels and go to some grand tomorrow. That's not going to happen. And so fossil fuels are going to be part of the energy mix in the short to medium term. The question is obviously, how do we get to somewhere different? And it's going to be through new technologies, many of which have been invented, but a lot of which are to be invented. That's not in our control. But what we can do is help fund those things and help market those corporates to investors.
What are European clients asking you about? What are they most anxious?
I think at the moment it's trying to make sense of the world and the uncertainty that there is. When do you think rates are going to come down? What do you think is going to happen in and around the tariff situation? what about the supply chain issues we're seeing? Critical minerals and rare earths, is it really that big issue or not? And where if the world wants to go to a plan B and not rely on China, the DRC and Indonesia, where are you going to get the supplies otherwise? And production's one thing, processing is another. It's all those kinds of questions that we get asked. We have a specialized group within our investment banking business. I'm one of the leaders of it, our corporate advisory team, which has subject matter experts across all of these different verticals who are all bankers but also come from very different backgrounds, proxy advisory backgrounds, sustainability specialists, tax lawyers, all of that to help our clients make sense of all of these challenges and issues.
I mean, the rare earths issue is one of the biggest. I think yesterday we also had a story saying EU leaders want China to really see how they can deliver on that ahead of the meeting next month. How do you see rare earths actually playing in this? It goes back to defense, it goes back to countries being self-sufficient, and it goes back to the green transition.
Well, that's the thing. I think these issues around the transition to a low-carbon economy and national security are just coming closer and closer together. And you have seen how this has played in international relations over time. In the 18th and the 19th century, this UK that we're sitting in had a very strong position, partly because we were the leaders in the first industrial revolution. We had loads of coal and iron, which helped underpin that position. And then you look to the 20th and 21st century with the emergence of powers in the Middle East, like Saudi, UAE, off the back of their oil supply. You now have a situation as we move to this fourth industrial revolution, or third, depending on where you take your figures. And China is leveraging its early investment into green technologies, not just for economic benefit, but for geopolitical advantage as well. And obviously played the fact that they control, 70% of the production of critical minerals, including rare earths, and 90% of the processing. They use that and export restrictions in the context of their trade negotiations with the US. I think we're going to see that more pronounced, how these issues play into geopolitics going forward. I also believe, I really don't think that the market has priced in the exposure of different corporates to these particular risks. Because although there isn't a supply issue at the moment, in spite of the growth in demand, you look at lithium, for example, there was a 30% increase in the demand for lithium last year relative to 10% over the 2010s. And we trade, lithium, cobalt, nickel, etc. But it's very concentrated amongst a few countries. And if there was a supply shock affecting just one of those countries, never mind if export restrictions were imposed by one of those countries, the implications for developed market companies can be very severe. And there is no doubt about it that certainly, the race to ensure that you have enough critical minerals in the context of this trade war, this poses an existential threat for some businesses, which, are some of the most well-known brands on the planet.
What's the solution? Because it also takes time. You can invest, but it takes, we're talking decades.
The US and the European countries are seeking to be self-sufficient and develop their own supply chains. But of course, that is unlikely to come without there being a cost, because, partly the prices are affordable at the moment. You don't have supply chain issues. To a severe degree, because it's relatively integrated. If you now move to different blocks being self-sufficient and it's fragmented and there's duplication across the supply chain, speaking to some of our strategists and people who trade these materials, there's a real risk that ends up driving cost up. And so, but that, I think you'll begin to see that reflected in prices once the stockpiling that has happened depletes and the physical inventories of this stuff begins to reduce, and then you'll begin to see the price impact is what my colleagues who work on our commodities desk are telling us.
Chuka, when you look at the public-private partnerships, which everyone has been trying to get involved with, is sustainability or ESG further down the line, given all of the geopolitical tariffs, trade, even war concerns?
I don't think so, because ultimately, I think there is a consensus view and certainly if we look amongst governments and the politicians of left and right, that we need to transition to a low-carbon economy. And that's not just for sustainability reasons, it's for energy security reasons too. And although, I mean, the US administration is clear it wants to deregulate, I think here in Europe, it would be wrong to see the moves to simplify regulations and remove some of the duplication there and red tape for business in the same vein. They're trying to simplify, not deregulate necessarily. And although, in the European elections last year, there was a move to the right, the kind of centre-right held. And so there hasn't been a big shift on that front yet. But I think the challenge for policymakers, given that in developed markets, middle and lower income families are living through a cost of living crisis, is how to transition without putting a disproportionate burden on those who are least equipped to shoulder it.
How do you look at AI? I mean, does it accelerate? I mean, it definitely accelerates.
Well, this is the big question, isn't it?
For green energy, but it also changes. I guess it could help at the margins, making it more efficient.
Yes.
You have enough of it.
Yeah. So I haven't pinned my colours to the mast whether I think net AI will reduce energy consumption through the efficiencies or increase it. Personally, this is not necessarily a house view, I'm a progressive and therefore probably more inclined to optimism. So I'd like to think that AI ultimately net will reduce energy demand. But equally, I mean, I think Jamie's on the record on this, is that I think our view, which of course I've subscribed to, is this is going to be a evolutionary thing, not a kind of revolutionary thing that will change everything overnight. But is it going to affect, my children and their opportunities and the transition that which is hopefully complete by then? It's obviously going to have a massive impact.
But will it accelerate? I mean, have you heard from leaders wanting to actually just become more green because we need so much more of the energy to just power AI?
Well, certainly if you look amongst the hyperscalers and many of the big tech companies, I mean, they need more energy and they're looking to low carbon sources for them.
Chuka, we have 1 minute left. What's the question you get asked the most, actually, in your role in sustainable solutions? Again, we started by saying there's hope because there are people like this in this room that want to make a difference. But what do they ask you apart from where's the money?
I think probably the number one question at the moment from corporates is trying to make sense of where the investment community is on the thematic.
Right.
And clearly in Europe, this is BAU, it's business as usual. It is not a controversial topic in the way that it can play in the US. And so trying to make sense of the noise to find the reality of the situation and how I should think about things is the number one question. And to be frank, I think if there are two benefits that have come from what has happened in the last year, one is it has anchored the debate around financial materiality. This was never charity. This was always going to be about making money, because ultimately these investors have to deliver a return for the asset owners and the beneficiaries. And I think this has anchored the discussion around that. This isn't some political endeavor or crusade. We see this as a big commercial opportunity, and that's ultimately where it's been anchored. And I think sometimes in the past, 3 or 4 years ago, there was a bit of a question of why am I actually being asked to do all of this by investors? And I think the second thing is a very interesting kind of observation I had in a meeting with the buy side, and I sit on the sell side, a couple of weeks ago, was one effect of, say, the withdrawal of some of these subsidies in IRA is you can see who can stand on their own 2 feet. You're not going to want to go and fund a company that cannot stand without subsidies and benefits. You want to be able to fund a company that's going to stand on its own 2 feet. And if you like, I'm not advocating for withdrawal of these subsidies and benefits. That's a political issue. But to the extent they get withdrawn, you see who's still standing, and therefore is obviously a more attractive investment proposition.